Here we are, MMTs. We're looking at the SLV, and what we're looking at, just like the AGQ was, is yesterday's close was 36, and we gapped 36.32. We gapped up. The low was 37.17, and it has that much range from the low of that gap today, right here, to the high. Nothing like AGQ. I mean, that one there is where you make the big money on. However, what we're going to be talking about is some of the reversals and some of the characteristics of public standard technical analysis. Now, MMTs, as you know, you will be using your SMF platform. One of the things that we're going to look at is where we had the 1 day, 2 day, 3 day, 4 day. We had a 4-day reversal. Why? That was the major wall of resistance, which was the major breakout to these all-time high reversals that we shorted before. This is the neckline of the long-term 2011 support on the SLV down here. What the rising 200-day simple moving average is, and so my point of it is that the 10-day moving average is turning over. You got support, but here's the main culprit of this trend, is that wall of resistance, we're going to have to consolidate above $38. That 10-day simple moving average cannot be going that way. It was a great short, so there are times to short that wall of resistance and then get net long. This support level right here is above your 50-day simple moving average, your 40-day, and now you gapped above this line right here. That color right there is the 100-day moving average. However, that resistance, we got to consolidate above the 10-day and the 20-day simple moving averages. This cannot go into a sell signal. This is range bound. There are times to get the greater short to support and buy at that major support level. If we hold and consolidate these bottoms here and take a run and we can get up and consolidate there, then the next resistance level is going to be right back here where this was the major support level to that top. Let's make sure that we get this all the way in here. The other thing is gold has made a great move. Is the SLV risk on trade and the AGQ silver risk on trade going to be there? Meaning that, hey, I can really get involved. Silver's used in industrials as well. You know, lots of things are used to make silver, but silver, you know, has a value. And it's a cheap man's gold. So my thought is that when people are going to run to safe haven with the new bear markets and all the indexes selling, is that where is that next big euphoria going to be? Well, none of it happens until we come back up here and consolidate and these daily moving averages over here turn around and we break these tops. You've got to break this wall of resistance that happened right here on the first day, second day, third day down, is that these particular wall of resistances, so you test resistance and you come back and you test this major support line right here. And why is this a major support line? Because this is where we had gapped up above it and then traded to those highs, pulled back, and then made this high over here within the trend structure right here. The most important relevancy to it, MMTs and public people, is that gap is going to become that support. This neckline of support that was broke through this big daily distribution bar is your short-term overhead resistance levels. The thing that we like about it is the long-term support level has been viable all year at these bottoms and tradable intraday. Long off of the bottom, short at the highs. You got to consolidate up here. If we fell in here and we do have a reversal, naturally it'll be a short again. However, the risk on trade is, do people want to own silver? I mean, this is up $1.70. That's a pretty good move for the SLV with $14.5 million in it. So once again, MMTs, is that this bottom here becomes a new neckline bottom where that gap was versus the long-term lows of the year right here, that neckline. But this neckline is a lot higher. Okay? And that we buy here and we sell up here on an intraday level until we start to go through those resistance levels. We will use our own platform. This is just a simple daily standard chart technical analysis that the big people would be looking at and how they're going to operate. However, we'll use our application. Once again, you got 29 million shares. We need to see the volume increase, though. We would like to see where the volume is at 70 million shares again, and 60 million shares again, and that the money flow exceeds $100 million, because what that's going to conclude is that people are going in here, put that risk on trade back in silver now. Short-term support and resistance levels. The bullish part is that it bounced off of this support level where we had prior gaps over here. Okay, we had prior gaps. That trend line is the test, and that gap is an encouraging sign. Intraday trading only until we find out that once, in order for us to break these highs up here and keep going, is that we're going to have to consolidate up above here now. And the simple moving averages must turn around in order to get to higher prices. And the risk on trade's got to come in, and the money flow will prove it. Once again, trading the SLV.